Hello viewers, welcome to my channel. I am Hasham. So far I have completed 3 short questions on partnership accounts in the last video. Now in this video 3 more problems I am going to explain, that is 4th, 5th and 6th. So before watching the videos on problems, I expect that my viewers have already watched the theory videos. First 4 videos I have explained you the complete detail regarding partnership accounts. So without understanding the theory, don't come to the problems. In examination, they will ask the theoretical part also. So if you have not watched the earlier videos, I suggest you go to the playlist of my channel. Select the subject Advanced Accounting New. Select the videos of partnership accounts. Be perfect about the provisions. Then you watch the videos on problems. Now before starting the 4th problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. Always keep it ready. Take the screenshot of the points, then I'll explain. Now, see the 4th problem. Problem number 4. Srimati Vani and Srimati Lakshmi share profits and losses equally, equal partners, 50-50. But by agreement, Lakshmi pays Vani salary of 1,000 per month out of her share in profits. It's an internal agreement between the partners. Lakshmi pays to Vani 1,000 rupees per month. That means for 12 months it comes to 12,000. That will be paid by Lakshmi to Vani out of her share of profits. The accounts at 31st December 2002 show the following results. Capitals are given: Vani 76,860 and Lakshmi 83,580. The net profit before charging interest on capital 47,010. Drawings: Vani 15,000, Lakshmi 21,000. Paid by Lakshmi to Vani in cash privately on account of salary 6,000. Actually, the agreement between the partners where salary will be paid by Lakshmi to Vani 1,000 per month. So it comes to 12,000 for 1 year. But internally she has already paid privately how much? 6,000. So only 6,000 will be adjusted in the capital accounts. After charging 5% interest on capital, write up the capital account of each partner at the year end. So first of all, before preparing the partner's capital account, we have to find out how much is a divisible profit after charging interest on capital. And one point you remember, the salary is not paid by the firm. If it is paid by the firm, it would have been included in appropriation account. Now salary paid by Lakshmi to Vani is an internal agreement, not related to the firm. So that salary will not come in appropriation account. Now, profit and loss appropriation would be, the profit as per profit and loss account is 47,010 given in the problem. Interest on capital is at 5% on their capital. The capitals are 76,860 Vani and 83,580 Lakshmi. On this capital 5% interest 3,843, 4,179. Now, credit side total 47,010. From this 47,010 minus 3,843 minus 4,179. The balancing figure is the divisible profit. How much is the divisible profit? 38,988. This is the balancing figure. 47,010 minus 3,843 minus 4,179. Now this profit is divisible among the partners. It is given in the problem, the partners share profits and losses equally, 50-50, half-half. So 38,988 into 1 by 2, it comes to 19,494. So each partner will get 19,494 profit. That's all. Now we'll prepare the capital accounts. In capital accounts, 2 columns on debit side and 2 columns on credit side. Vani, Lakshmi, right? So how much is the capital at the beginning of the year? 76,860 is the capital of Vani and Lakshmi 83,580. By balance brought down is the opening balance. Now we credit interest on capital. Interest on capital For Vani, it is 3843 and Lakshmi 4179. Then we'll take the share of profit. So how much is the share of profit? 19,494 for both the partners, right? Drawings should be taken on the debit side. Remember, drawings will not come in appropriation account. Drawings will be debited to the capital account. So here capital account debit side to drawings 15,000, 21,000. Now, regarding the internal salary paid by Lakshmi to Vani, Lakshmi is paying, Vani is getting. Out of 12,000, 6,000 already paid privately by Lakshmi to Vani. Still how much due? 6,000. 1,000 per month into 12 is 12,000. Out of 12,000, 6,000 paid. Now 6,000 is due. Now the entry will be Lakshmi capital account debit, Vani capital account credit. The partner who is giving should be debited, and the partner who is getting should be credited. Here Lakshmi is the giver and Vani is getting. So Vani's capital should be credited. This is the credit side. On credit side, Vani's capital 6,000 credited and Lakshmi's capital should be debited. In Lakshmi column 6,000. In Lakshmi column debit side 6,000, Vani column credit side 6,000. Lakshmi is giver and Vani is the taker. So credit side. So here we'll write Lakshmi's capital salary. Here Vani's capital salary. Because Lakshmi is debited, the opposite Vani's capital. And here Vani is credited, Lakshmi's capital. That's all. Now simply we have to find out the balancing figure. At the end of the year, what is the closing capital of Lakshmi and Vani? So first of all, if you take the credit side total, the credit side total comes to 1,06,197. From 1,06,197 minus 15,000, you will get 91,197. This is the closing capital of Vani. So balance carried down 91,197. Here by balance brought down 91,197. Finished. This is Vani's. Now Lakshmi's. Credit side Lakshmi total is 1,07,253. Take the same total 1,07,253. From this subtract minus 21,000 minus 6,000. You will get 80,253. So 80,253 carried down. Here 80,253 brought down. So end of the year, the capital of the partners are this one, 91,197 and 80,253. That's it. Now, fifth problem. In each of the following cases, indicate the alternative which you consider to be correct. So few alternatives are given. You have to decide which alternative is correct. So 3 bits are given A, B, C. In A bit, in the absence of an agreement, profits and losses are shared by partners in the ratio of capital. First answer is capital. Second answer is equally. Third answer is drawings ratio. And fourth answer is 3:1. In the absence of agreement between the partners, actually the profit sharing ratio will be stated in the partnership agreement or partnership deed. But sometimes if the partnership deed is silent, nothing is mentioned regarding the profit sharing ratio, then Indian Partnership Act 1932 says if there is no provision given for profit sharing ratio, all the partners should share equal profit. If 2 partners are there, 1/2, 1/2. If 3 partners are there, 1/3, 1/3, 1/3. If 4 partners are there, 1/4, 1/4, 1/4, 1/4, like that. So equal ratio, the profit sharing ratio will be equal if the partnership deed is silent. So here, out of the 4 answers, the correct answer is equally. That is second answer. So here, answer 2. According to Indian Partnership Act, in the absence of agreement, partners should share the profits and losses equally. That is the right answer. Second, B point. In the absence of an agreement, interest on loan advanced by a partner to the firm is allowed at the rate of. Now 3 options are given. First option 6%, second option 4%, third option 10%. If a partner has given a loan to the firm, apart from capital, every partner will contribute the capital. But apart from capital, if a partner has advanced a loan to the partnership firm, then what is the rate of interest to be allowed on the loan? It must be specified in the partnership agreement deed. Suppose if the partnership deed is silent, then Indian Partnership Act 1932 provisions will apply. So according to that provision, if a partner has given a loan to the firm should pay interest on loan at the rate of 6% per annum. At the rate of 6% per annum. So here three answers are given, that is 6%, 4% or 10%. The correct answer is 6%. According to Indian Partnership Act, in the absence of agreement, interest on loan advanced by a partner to the firm is allowed at the rate of 6%. Now last, see it. In the absence of an agreement, partners shall be paid salaries. First answer, be paid salaries. Second, not to be paid salaries. Third, to be paid an amount of 10,000 per annum. Or fourth, be paid 15,000. Actually, when salary is paid to a partner, it should be mentioned in the partnership deed. So the Partnership Act will not restrict the partners. The Partnership Act says if a partnership firm wants to pay salary to the partner, it should be mentioned in the partnership deed. If it is not mentioned in the partnership deed, then Indian Partnership Act provision says no partner should be paid salary for the services rendered. The partners should get only profit. The partners should not get any salary or commission. If the partnership firm wants to pay salary, it should be written in the partnership deed. So here the correct answer is second. No salary should be paid to the partners. According to Indian Partnership Act, in the absence of agreement, partners shall not be paid salary for the services. That's all. So fifth problem completed. Now I am coming to the sixth problem. See the problem carefully. A, B and C are in partnership with respective fixed capitals of 40,000, 30,000, 20,000. That means they are maintaining fixed capital method. All the adjustment will be done in the current account. Previous problem, fluctuating capital method. There is no current account. All the adjustments had been done in the capital account itself. But here it is saying, in the next problem, sixth problem, it is saying partners are keeping fixed capital. Now, how much of the capital? A 40,000, B 30,000, C 20,000. B and C are entitled to annual salary of 2,000 and 1,500 respectively before division of profit. It is written in the partnership agreement that B and C shall be allowed salary at 2,000 and 1,500 annual salary and before division of profit as usual. Interest on capital is allowed at 5%, but interest on drawing is not to be charged, only interest on capital. Of the first 12,000 divisible profits in any year, A is entitled 50%, B 30%, C 20%. Annual profits in excess of 12,000 are divisible equally. So, the new point here is, the partnership agreement says, first 12,000 of divisible profit, the profit will be shared by 50% to A, 30% to B and 20% to C. First 12,000. And any profit over 12,000 will be shared equally by the three partners. Now, the profit for the year ended 31st December 2014 was 20,100 after debiting partners' salaries, but before charging interest on capital. The profit is given after debiting salaries. That means salary should not be taken in appropriation account. So before profit and loss appropriation account, we have already prepared the profit and loss account. In that profit and loss account, salary was already debited. Right? So now salary should not be debited. Only interest on capital should be taken. Now, The partners' drawings for the year were A 8,000, B 7,500, C 4,000. The balances on partners' current account on 1st January 2014, beginning of the year, were A 3,000, B 500 credit and C 1,000 debit. So two partners' current account is showing credit balance and C's current account is showing debit balance in current account. One point you remember, the capital account always shows credit balance, but current account may show credit balance or it may show debit balance also. So A and B current account credit balance and C current account debit balance. Prepare profit and loss appropriation account and the partner's current account for the year ended 2014. That's it. So first of all, we prepare profit and loss appropriation account to find out the divisible profit. Profit and loss appropriation account. The profit as per profit and loss account is 20,100. Now debit side, interest on capital. The fixed capital are 40,000, 30,000, 20,000. On this, 5% is the rate of interest given in the problem. So multiply 40,000 into 5%, 2,000, 30,000, 5%, 1,500, 20,000, 5%, 1,000. That's it. Now we can find out the divisible profit. So total 20,100. From 20,100 minus 2,000 minus 1,500 minus 1,000. So remaining profit, divisible profit, balancing figure is 15,600. So total divisible profit 15,600. Now this 15,600 will be shared by A, B and C. How it will be shared? Here I have it. The provision is first 12,000 rupees. Here it is more than 12,000. 15,600. The first 12,000 in the ratio of 50%, 30%, 20%. Of the first 12,000 of profit, 50%, 30%, 20%. So 50% of 12,000, 6,000 to A. 30% of 12,000, 3,600 to B. 20,000 of 12,000, 20% of 12,000, 2,400. Now the excess profit over 12,000 will be shared equally. So total divisible profit 15,600. From 15,600 minus 12,000, the remaining amount is 3,600. This excess 3,600 will be shared equally. So divided by 3. 3,600 divided by 3. So each partner will get 1,200. So 1,200, 1,200, 1,200. Now take the total. 6,000 plus 1,200, 7,200. 3,600 plus 1,200, 4,800. 2,400 plus 1,200, 3,600. Now you can see A 7,200, B 4,800, C 3,600. That's it. We have completed appropriation account. Now we'll start the current account. So 3 columns on debit side, 3 columns on credit side. A, B, C, 3 partners. Now first we take the opening balance in current account. A and B current account shows credit balance. So by balance brought down 3,500. This is the credit balance of current account for A and B. And C is having a debit balance. So debit side to balance brought down 1,000. That's it. Now we take interest on capital on the credit side of current account. So interest on capital, how much? Here we have calculated 2,000, 1,500, 1,000. 2,000, 1,500, 1,000. Next we take the share in profit. The profit share is 7,200, 4,800, 3,600. Here I take. Now salary is allowed to the partners. Already it is taken in profit and loss account. Now salary will be credited. Here salaries. 2,000 to B and 1,500 to C. No salary to A. Only B and C. Now drawings are given. The drawings are 8,000 A, 7,500 B, 4,000 C. That's all. We have taken all the items. Now we need the closing balance in current account at the end of the year. Now here you can see 3,000, 2,000, 7,200, 12,200 is the total on the credit side. From 12,200 minus 8,000. So 4,200 is the balance carried down for A. So take this to right hand side, credit side, by balance brought down 4,200. A's current account completed. Now B's current account, 500 plus 1500 plus 4200 plus 2000, 8800 is the total on the credit side. From 8800 minus 7500, so 1300 is the closing current account balance for B. So to balance carried down, here by balance brought down 1300. Last one C. Beginning of the debit balance. Now end of the year you will find credit balance in C's account. How? 1000 plus 3600 plus 1500 total come to 6100. Credit side 6100. From 6100 deduct 1000 and 4000. 5000. So 6100 minus 5000 you get 1100 is the credit balance. So balance carried down 1100, here balance brought down 1100. That's it. So this is the end of problem number 6. So in this video I have explained you 3 problems, 4, 5, 6. So if you want a complete command on this subject of partnership accounts, watch all the videos from beginning till end. Don't skip in between, don't join in between. Watch once, twice, thrice. Then only you can be able to get a complete command. You can get the confidence on this chapter. In examination, very frequently the problems will be asked from the partnership accounts. So apart from this advanced accounting, I have uploaded so many videos on different topics, different subjects. For MBAs also I have uploaded like statistics for management, accounting for management, operation research, financial management and investment management. And from graduation level for BBA etc. I have uploaded the videos for cost accounting, corporate accounting, financial accounting, computerized accounting, auditing, income tax, statistics. So many videos are there. So select your subject from the playlist, watch the video, enhance your knowledge, get confidence on different subjects. Inshallah, we'll continue the next problem in the next video.